Otherwise, it's just noise. But all right, ladies and gentlemen, let's get going up. There are my pips. I see my pips. Da, da. All right, Forex.Today is hosting this webinar. Thank you so much. Let me remind you that trading and investing risky may not be appropriate for you. Your past performance is not indicative of future results, which makes your risk even more difficult to gauge. Therefore, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hola, konnichiwa, ni hao, jambo. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers traders access to the Forex market, but also energies, metals, indices, and binary options. This is a strategy session. We do this as a team and as a community here at Forex.Today every single day, Monday through Thursday, 7:30 in the morning, which is 2 hours before the New York Open. It's approximately London lunch. And every Friday we do these strategy sessions at fxstreet.com. Today is the 27th of October. It's a Tuesday. It's a Fed meeting day, but the announcements and such are tomorrow. Today they go through the presentations, so on and so forth. If you've attended any of my live FOMC meetings in the past, I teach you exactly what happens on Tuesdays and Wednesdays, just so you know. Maybe in December we'll do something. Currently, the S&P 500 down 0.1%, so flat. NASDAQ flat. 10-year T-note unchanged at 2.06%. Oil is already down, way down to $43.35, a decline of 1.44%. USD yen back to the area of 120, which is support going back a very long time, about 0.2% down. Euro USD pretty flat. I can't tell you the exact price because at the current moment my monitor, that monitor number 2 I think it is down, so I'll have to reboot, but I'll delay. The CAC down 0.5%, the DAX down 0.5%, the FTSE down 0.33%. I believe the Shanghai was slightly up, and I think the Nikkei was slightly down. And today there's a lot of companies reporting for earnings. So lots of reasons to delay serious investment decisions. So that's where we are as of the moment. You'll find this information here at Forex.Today. You can also register to use the community chat. You can also register so you can attend these events. You can also register so that you can receive at least a dozen trading ideas that are posted every single day for you at Forex.Today. And our webinars, the recordings of all the webinars are posted here at Forex.Today. So go to Forex.Today. Ahead of Friday's BOJ statement and economic outlook for GDP and CPI, there was a financial press report published in Japan this morning stating that the BOJ is open to possibilities of more QE, but it's not a given. Officials cited risks of corporates being inclined to pass on higher profits through wages. Okay, well, isn't that what the BOJ wants? Let me read that again. Companies are less inclined to pass on profits to their employees. Well, that's how you create inflation, right? This is what Japan wants. And the Bank of Japan actually went to corporations, large corporations, and asked them to do it. This was about 2 years ago. Asked them to pledge to do it. So what the Bank of Japan wants is inflation. And where do you get inflation? From spending. Where do you get spending from? Income. Not just short-term income, if you felt like you just got a short-term bonus in your paycheck, a one-time bonus, you're more likely to pay off a credit card debt with that. If you feel like you got a 10% raise and it's forever, you'll spend it. You'll spend that money because your expenses probably haven't gone up at all. You're going to live in the same house, drive the same car. You'll just make more money, and you're already saving, so you'll consider that spendable income, right? So you got to have long-term income, and therefore you have to have a secure job and all that kind of stuff. And so the BOJ is printing this money, creating an environment for Japanese companies to make profits, and the BOJ is hoping they take that money and give it to the employees, basically, right? And this report says, well, maybe they just want to spend the money on something else, or maybe give it back to their investors as a dividend or something, but they're less inclined now than they were a few years ago to give it to their employees, because they figure maybe that won't last. Okay? So the BOJ responds to that and say, well, nothing's changed over the last couple of years. So why don't you continue to pledge it? So there's a little kind of push and shove going on here. But recall this time last year, the Bank of Japan did expand its quantitative easing at this meeting that's coming up. Cool. How about New Zealand? Let's talk about New Zealand for a second. New Zealand posted its fourth straight trade deficit. Should New Zealand have a trade deficit or a trade surplus? What's the typical balance of trade for New Zealand? By the way, where's my pro traders? Are any of my pro traders logged in? They're sleeping. There's Daniel. Hey, yeah, Daniel. Did you see that I posted a new video on the Series 34? One of the things we talked about in the video is the balance of trade and balance of payments and current account, capital account. Oh, good. Cool. Well, make sure the other boys know, huh? All right. So anyways, New Zealand should have a trade surplus. So for the fourth time in a row, they have a deficit. So that's not going to be good for New Zealand, right? The export side of this, because we're looking at net exports, right? So we're looking at exports minus imports. Exports were worse than expected. 8-month low. Oh, snap. Well, their imports came in at 12-month high. Holy smokes. They're exporting less and importing more. Wah, wah, wah. Not good. All right, so what's going wrong here? Shipments to Australia were soft, falling almost 10%. So that means Aussies are importing less to their country, which means maybe they don't have any money. Right? You see how it's all interlinked? Well, exports to China were up slightly, but not significantly. How about this? And it's funny because I actually talked about this in the video, Daniel, about dairy shipments being important in New Zealand. Dairy shipments decline 22%. Oh no! How'd you like to wake up one day and find out, like, your job, they're like, oh, sorry, dude, we got some financial problems. We're going to have to cut your salary by 22%. You're like, really? Because I kind of needed that money. Holy smokes. Now look at this, though. So their imports went up. So they're actually spending more and making less money, if you want to look at it that way. Right? Your income dropped by 22%, but your spending went up? So look at this. The month before it was only down 7.5%. I mean, amazing, huh? Amazing. Last month was only down 7.5%, but now it's down a further 22%. Like, wow, holy smokes. So what would you expect the Kiwi dollar to do? Yeah. And what do you call that economic terminology besides correlation? So imagine if wheat prices fell 22%, would the Kiwi dollar be would the Kiwi dollar also drop significantly if wheat prices drop 22%? No. But dairy prices dropped 22% and the Kiwi dollar should drop. So we call that elasticity. So anyways, I wanted to talk about Kiwi dollar there. That's pretty amazing stuff, isn't it? Holy smokes. All right, nothing went on in Europe today. We could probably just end it there, but let's talk about it. Sweden's confidence exceeds expectations. Good job, Sweden. Yeah. Eurozone lending data continues improvement. Yay. All right, so that's fine. So keep doing quantitative easing, ECB. So look, if it's working, maybe you should do more of it, right? Hint, hint, nudge, nudge. UK third quarter GDP misses consensus. Fine, whatever. Yeah, I'm telling you, it's all going to be about the big surprise in Q1. Okay. U.S. test China's resolve. Yeah, so what happened, I don't know if you caught this, but we sent out a warship out to the South China Sea because China said don't do it. So we're like, well, we have to do it now because he told us not to. So anyway, so now we're there. So we'll see what happens. And I want to point this out. South Africa, their unemployment rate, 25.5%. Who's that rate, eh? Holy smokes. Do we have any South Africans here? Ouch, oh, that's a bad number. If I wanted to buy a vineyard in South Africa, are prices down right now or prices up? Can I get a good deal? Or is just some properties just never going to go down because some people are always going to be rich? I mean, is 25% unemployment normal, or like, talk to me, Goose. I could probably get a deal. Yeah, well, that's what I'm thinking, right, Jimmy? Cheap labor, at least someone, but I don't know. But wow, huh? Holy smokes. Minus 25. And again, I want to bring up an interesting thing about foreign exchange. There was a time when gold was almost $2,000 an ounce and the US dollar was weak. Right? And South Africa would take gold out of the ground and sell it in the open international market, and gold is priced in dollars. So they'd sell it $2,000 an ounce, and then they'd go back and they would have to pay their workers and pay for the electricity and so on and so forth. Then gold prices dropped from 2,000 to 1,000, generally speaking, right? And the dollar actually gained value. So gold is down 40% from the top. In South Africa, gold mines go out and now sell their gold at, $1,100, $1,200 an ounce, significantly less, right? At least $800 less per ounce, but they're more profitable. They're more profitable because now they get their $1,200 an ounce for gold, which is a lot less than $2,000, but it's in dollars, and they go back home. They pay their workers, they pay the electricity bills, and there's more South African rand left over than before. What happened? Why would you make more money when gold's dropped by 40 and 50%? What happened? The US dollar value went up, South African rand value went down. And so they may not even really be in the gold business. They might just be in a foreign exchange business. I have a friend that does something like $4 or $5 billion worth of business every year, and he's in the commodity business, physical commodity. Owns like ports and stuff too, because of his business that he does globally. And one time he said to me, he's like, Wayne, sometimes I really don't know what business I'm in. Is it commodities or is it currencies? He's like, sometimes it's really difficult to figure out. Because I might make or lose all my money based on the currency. And the rest is just some reason to do business. So fabulously interesting stuff if you get into it, guys, isn't it? That you can make more money on gold when gold prices drop by 40%, but yet you have more money left over. Yeah, it's just foreign exchange. All right, guys. Let's pull up the TradersWay MT4 account and let's get going. Let's do some technical analysis. What happened there? All right, don't click that button. I knew something would go wrong. Do you see charts? It's telling me you don't see charts. You do see charts. All right, good. Yeah, all right, good, good. I'm happy with that. All right. Because it's telling me you don't. So let's keep going then. So while this is loading, let's just remind ourselves, tomorrow's a big day. There's going to be a risk event, right? Not likely the Fed's going to do anything. Not likely there's going to be a major change in the statement. But risk event nonetheless, just a small risk event. And then, of course, Friday is a big one with Bank of Japan. So keep all that in mind. All right. So these are all the little, let me get rid of this, probably distracting. This is where I was showing you how you could trade using no indicator at all, just using a line chart. Okay. And to simplify your charts, right? Let's go into here maybe. You got little micro moves. So how would you draw your chart, right? There's lots of different ways that you can draw these things. And what I'm doing is I'm just connecting tops and bottoms and looking for levels of resistance. Remember, if you're a bear, this goes back to a previous discussion that we've had. If you're a bear, all you need to know is, one, is the market trending in the direction of your fundamental bias or long-term technical bias? If you're a bear, you want to see the market going down. And if so, identify 2 or 3 levels of resistance in which you might consider selling. You may not sell, but you might consider it at those levels. If you're not at those levels, you don't do anything. So looking at the daily chart, the first sort of levels are higher up, right? Let's put this between the 382 and the 50%. If price went up here, let's say on Friday, would you consider selling? You don't have to pull the trigger, but would you consider it if you were a bear? That's all there is. And then, of course, once you get to the gray zone, if you get to the gray zone, you'll move into a smaller time frame. So let's say you start to tickle the 3A2. That's where you drop into the hour. And look for some sort of top. Let's say you come up here, and then you make a significant low. So let's pretend this is what we see. I would draw this because this low is lower than that low, defined by this, right? You see how that low is lower than that low? So therefore, somewhere between the 382 and 618, I would sell. And of course, what you can see here is price does come up. Price does hit the 382, and then eventually drops. So that's how I would put that together. Okay? So you're constantly doing this on multiple time frames. So before the webinar started, I showed my screens, and somebody said, wow, look at all those screens. What do you do? Well, I look at everything on multiple time frames. Okay? So I might want to be ready. Okay? So this could be an interesting area here. Where's resistance if I'm a bear? Right? Maybe there? Right? I could maybe perhaps measure this move, this low to this high, couldn't I? And you'll see that this is about a 382 anyways. So let me revise this slightly. I might want to include all of this. Oh, come on. Sort of that area, maybe? Okay. Zooming back in. This would have to be a pretty aggressive move to fall here, don't you think? Oh, look, that monitor came on, the one that wasn't working before. Now it works. I just looked up at my Euro USD chart. I'm like, oh, look at that. All right, so suddenly it works. Yay. All right, so wouldn't more information be helpful? So you have to ask yourself, do you want to sell this, yes or no? If so, is this a level of resistance? Maybe. How aggressive are you? If you're very aggressive, you want to start looking for it sooner than later. Now, it's not a 382, so why would I want to sell it? Well, would you consider this price action resistance in here? I mean, how close is it? It's fairly close, isn't it? It's not wicked perfect, but it's close, right? So the thing is, are you looking for reversal patterns? But I would like to know if this is an important level of resistance. Let's add some more data. So this is a naked chart, right? We have no indicators. But that goes back to, you know, a discussion where I asked you to take all your indicators off, look for support and resistance, and then try to figure out what you feel you're missing. Did anybody do that? I said, just get a naked chart, do nothing but identify trend and support and resistance, and then decide what you feel like you're missing. What are you actually missing your oscillators? Does that bother you? Like, man, I wish I knew the Stokes. Well, then fold that in. One of the things that I like to look for, so going back to here, you'll see it's a very similar setup because we've already shorted this. Right? We've already gone through this conversation. See, here's that big high. There's the big drop. There's the roll reversal. You know, we were actually short this before the news came out. How lovely. All right, so now we've had this fabulous drop of several hundred pips, but that's what our job is. Because if you remember, even when Euro USD was going up, the whole conversation was no one was buying it, right? I just didn't know if we were going to sell it at 15 or 115 or 120. But if you're a bear, you're going to sell it somewhere. We just needed the big drop. Well, here's a very big drop. So what do we do now? Well, I'm kind of missing a couple of things. One, I would like to sell this when this starts to look overbought. Okay? Two, I'd like to sell this when we get in the neighborhood of the 21. Okay? Let's update this to the more current chart that we did. I have it more like this. So up near that area. And then look at the hourly. What does this say to you? What it feels like to me is that we're going to make a little low and then it's going to come up. It's going to break the 55 and we're going to meet the 200 EMA somewhere around the 3A2 and weekly central pivot point. And then the 4 hour is going to be way overbought and we may want to come down. I want to connect this low to there as well. Does that feel right to you? Did I short the 21 hourly 21 yesterday? What I was focused on yesterday was setting up the Japanese yen. So, just I'm preparing for really next week is what I spent most of my time doing analysis on. It's like dealing with the Euro USD now, it just feels late. Right? So it's more like where were you at 114 and 115? So now it's falling. Of course, it's falling. Yeah. But all right. Yeah. But it's just, yeah, it's falling and adding more and stuff is fine. But, I spent at least a week or two or maybe 3 weeks preparing you guys as Euro USD was rising, preparing you for it to drop. Then we got our drop and then the pullback. So we've already set all this up. It's already kind of one and done. And I'm preparing for the next big move. And and it might be possibly be yen based. So I'm setting that up. And that's what I've been doing the last several hours or, the last 24 hours. Waiting for I'm setting up next week's move. Sorry. But yeah, there's some more pips to be made. So selling at the 21 is fine. On the 4 hour, we may rise a little further, spike up, and then drop. Okay. So, what you could do is print out this chart and then change the time frame. And this doesn't look like it wants to fall now, does it? No. 21 is flat. 55 is flat. So I think we'll either move sideways, 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 sideways until the 200 catches up, or we head up into this gray zone, in which I will prepare to fire for effect. Okay. But I think we'll double bottom. So this will go up to 111 and a half, and then I'll drop it like it's hot, and I'll pick up 150 pips. But because I'm long term, more bearish than bullish. I might, even though technically it may only come down to the double bottom based on a different time frame. I forget why I thought that, but my goal for the end of the week is to sell the 382 and take profit at the 1618 because that's what Fibonacci theory tells me to do. Plus, it overlaps with the weekly pivot. So I'll sell it at 111 and a half and try to take profit around 108 or 107 and a half. Okay. The risk tomorrow is that the Fed does nothing, almost no change in the statement because there's no press conference, so they can't really make any significant changes. And that disappoints the market greatly for some reason, even though we already all know this. And somehow the dollar just plummets. Euro USD goes straight up like a rocket ship. I don't think it should do that, but anything could happen. Okay. Does that help technically, though, guys? I know there's a lot going on some of these charts, but I'm just looking all the way back. Can't see where this started. This looks like it's here. Maybe I'll just redraw it. See, all of this to me looks like a nice little sell zone. Okay. I guess at some point I'll have to just update all those charts, just clear them all off. All right, let's look at Aussie dollar. So one reason I'm setting up yens, and we're not going to look at yens, we're going to look at dollars here, dollar pairs. But I'm wondering if here at basically the last day of October, Bank of Japan does add quantitative easing. 2, in December, the Fed feels the economy is strong enough to raise interest rates even 0.25%, which may be a improvement. Even though interest rates are going up, it might be a good sign globally that things are picking up, and the Fed seems confident enough in macroeconomics, not just the local economics. So that could be a good sign. And then the ECB adds quantitative easing, which means, a major economy is doing whatever it takes to bring itself back online, which is good for everybody else. All of this might be good for commodity currencies, and commodity currencies have been crushed. Absolutely crushed. So I'm wondering, between now, December 27th, and December 27th, I wonder if we'll get ourselves a bit of a rally. Not significant, but maybe a bottom forms. And we talked about that a little bit yesterday, right? About maybe a trough forms. So I'm kind of open-minded here. Now, I already set you up on this last week, so I don't know if you're still playing it or not. Okay? But remember, we talked about this coming down, And then what? The daily finding its footing. And I look at the daily chart now. Let me zoom in. How does this oscillator make you feel? Not happy, right? I feel happy. So, yeah, all right. So, I don't know. What's the thought process here? We did this several days ago, and all we had to do was wait for a complete oscillator cycle, find a fib, right? Find the role reversal. I talked about two key areas for potential buying, right? You got sort of this area here, and you got this area here. So the thing is, do you write this stuff down? Like, do you say, wow, that would be really good. I should print this chart out and put it on my wall and see if it happens? Or do you just kind of move on.com? And that's what I mean about the Euro USD sort of late, yeah, okay, fine. That's happening, but I'm already trying to find the next new thing, right? In trading, you're always looking for the next new thing. Whatever you're doing now is going to stop. You might sell Euro USD for 2-3 days in a row, and then it's going to retrace back up, and then you might give all your pips back unless you find the next new thing. So I'm already looking for the next new thing. Okay, so if Euro USD goes up because of a disappointing FOMC statement tomorrow, what happens to the Aussie dollar if Euro dollar is going up? Right. So I need to have this in play because someone that sells Euro USD over and over and over again is going to sell Euro USD after that disappointing statement and maybe sell it high and say, oh, that's gone too far, or oh, look, we're at a psych level, and they'll sell into the rally and they'll lose money, and meanwhile, we're already long Aussie dollar making a ton of profit because we're already on to the next new thing. So we got to say, look, if Euro dollar is going to go up tomorrow because of some sort of disappointment in the market, now why? I don't know, nor does it matter, right? Just the market's disappointed about what happens tomorrow at the FOMC. What are you got going on to make money in that situation? Okay? So that's what the value of this is. So you got to have your plan B ready to go. Now, is it possible you can find a way to get in this trade on the smaller time frame and maybe jam your stop at break even? Well, that's what you're actually supposed to be doing, right? Okay, you see what I mean? If you're only messing around with Euro USD, you might miss the setup here, and you want to be long this tomorrow, so you got to get in it today so that by the time tomorrow starts, you're already at break even, hero or zero. And you can see here we had a little little wedge thing going on, so on and so forth. But so now you got to put it all together. Do you want to be long this at the 382? Because ideally, if it goes down to the 618, you take a small loss and then you pick it up down here, or you break even when it comes down, right? All right, so put this on your radar screen, guys. If this double bottom higher high creates a 1, 2, 3 pattern, it's going to rally up into here, right? Which we've already talked about, and in which place I'll sell hard. So we got, that's like enough trading to get us through to the end of the year, don't you think? So we'll maybe buy it this week and rally it up for several days. Now, the conversation that we had here is that the Fed doesn't raise interest rates. The dollar weakens. This thing rallies all the way to 75, right? So we got, what, 3 weeks until Thanksgiving. Then the market quiets down. Then we have December NFP. And then once December NFP is out, especially if it's a good NFP, are you listening to me? We're talking about December non-farm payrolls, the first Friday of December now. I know it's like the last few days of October. We're already thinking the first Friday of December. December. If we get a good non-farm payrolls, good meaning whatever, not bad, a good NFP. People are going to say Fed is 100% going to raise interest rates, and boom, U.S. dollar gets ripper strong, and we could be in here. Now, the funny thing about this whole thing is I probably wouldn't sell Aussie here. Maybe I would, or I would try. But, you know, someone's going to benefit from more quantitative easing out of Japan, more quantitative easing out of Europe, and a strong dollar, U.S. dollar. Someone's going to benefit from that, right? Let's hope it's South Africa, and maybe they can get all the way to only 20% unemployment. All right, so we're just thinking ahead. Feels good to be smart money, doesn't it? All right, anybody trade British pound? Okay, let's realign our satellites here. This is a weekly chart. We started shorting this pair in May or June. Isn't that interesting? So we make our head and shoulders essentially, then the 1, 2, 3, and now we're range trading. But on a weekly chart, it's looking more bearish than bullish. And look how we have it drawn out. It's actually quite pretty. Going to the daily now, that's where we are in the process. How loufle. This is all very nice. If I were to update this slightly, I would draw it like this. And then this should make I would say more like a lower high. Nah, it's not going to be like that. Hang on. Let me update. It's going to be flat on the re-entry. And then I'm going to come here. Yeah, that's about right. Now I'm going to bring this up a little more. All right, there we go. And you know what? No, I'm going to bring it off of this. All right, more like that, I guess, now. Okay. Double top, right? Lower, right? Down to the bottom, back to the top, lower low, lower high, lower low, lower high, hopefully a new lower low. If not, it's going to, the reason I have it like this is what you end up doing is once it does its retracement over here, so let's say it does make a lower low, it's going to want to make a lower high, but all it's doing is fibbing, right? Up into here, and sell the 618 and drop it like it's hot. So that's all I'm doing there. All right, so David's long. Okay, so you're fundamentally bullish. That's cool. This is just my thought process, right? Are you buying the pound or are you selling the US dollar? You're buying pound. All right. Did you buy pound yen or pound Swissy or? Okay, dollar index weakening going into the news. Big decline. So durable goods is coming out in, what is it, 90 seconds? Yeah. Yeah, looking for yen. Yeah, so like tomorrow is the big risk event, right? So if dollar weakens, maybe money flows back into the Japanese yen and you get short-term strength, but then maybe we end up buying USD yen at 119 again. So why don't we actually move over to that pair as the news comes out in less than a minute now and see where we stand.
Minus 1.2% for durable goods. That's 0.3 higher than expected. Prior month revised further lower to minus 3% from minus 2.3%. Durables ex transport at minus 0.4% is 0.4 lower than expected. Back month revised to minus 0.9 from minus 0.2%. Capital goods orders and non-defense minus 0.3% is 0.5 lower than expected. Back month revised lower. And capital goods shipments at 0.5% is 0.1 higher than expected with the back month revised down.
All right, that was tradethenews.com. So minus 1.2%, which was better than expected. How lame, huh? How lame. Wait, this didn't change? I thought sure I changed it. Hey, good job. Only negative 1.2%. Yay. Good job, America. Hey, Euro USD is rising. Maybe I should freak out and buy it. Or maybe it's just coming up to my sell zone. Good, says the bear. Good. Come on up, Euro. Come on up. All right, so here we are on USD yen. I can't find the chart. It must still be on this page. Let me go back. I'm trying to find something, previous analysis that I thought I had. I must have done it on a different live account. This is the one where I was showing you how to scalp the stock market. But there must be analysis here somewhere. Maybe I've deleted it. All right, well, let's do some basics here. Let's identify some support. Does that look about right to you guys? And then let's do some resistance. Okay. Does that seem right? All right, let's zoom in here. Let's look on a 4-hour. So pretty obvious levels, right? And we're at support and resistance. Coming up to a psych level, past performance says, you don't have to buy it right at the psych level just because it's a psych level. Seems like it just kind of cycles around the psych level. So maybe we buy it at 19 or 18. Okay. But we don't have to buy it today. Okay. Right now we're just kind of moving sideways. But shows you if you identify that you're in a range, and we know we know we're neutral, right? We know this from the Commitment of Traders report. Nobody's long and nobody's short. So the only ones trading here are, shorter term traders that don't hold their positions more than a week. Think about it. If you're in and out of this trade in a couple of days, you're never on the Commitment of Traders report. So you could buy at support and sell at resistance, right? It's called range trading. Well, someone's done that. Now, if tomorrow's FOMC statement is disappointing to the market, this drops all the way down to 118, 118.50 actually, right? And maybe you pick it up for a song. And by the end of December, we're back at 125. Why would we be at 125? Well, at the end of December, the Fed raises interest rates. Meanwhile, before that even happens, let's say we have a good November non-farm payrolls, people immediately start front running it. Boom, that's it. Whatever decision made, they're going to raise. We had a great November NFP, jobs are there, everybody's happy, boom. And the dollar gets ripper strong starting the first week of November, which is soon, I might add, right? So we're disappointed tomorrow, and then 10 days later, we're super ripper happy again. Manic depressive, that's what we are, we're traders. So we buy it at 18.50 because we're so sad about the US dollar. And then a week later, boom, we're so glad again. And this thing rallies up. Meanwhile, just before that, the Bank of Japan says maybe sometime soon they add to quantitative easing. Maybe good enough. Europe in December does some quantitative easing. That's good too. And it all gets good again. And by the end of the year, you're like, why didn't I buy this at 118? I could be up 800 pips on this USD yen. And we'll say, oh, too bad, so sad. So you have to decide where you want to be when you grow up, right? Where do you want to be in the future on this pair? And if the market gets irrationally disappointed tomorrow, and this thing drops down here, are you going to try to buy it? Not blindly, of course. Are you going to watch it here and then get reversal patterns and stuff and say, well, based on what I think is going to happen or what could happen in the near future, I'd like to buy it, manage my risk appropriately, but let this run up. So you'll manage the stop, so you remove the downside risk, and then you say to yourself, but I'm not going to take profit. I can't lose money. Let's say, after a day, you move your stop to break even. And you're just like, I'm not going to take profit on this because if we can get a good NFP and if we can get the Bank of Japan to do more QE, if we can get the ECB to do more QE, if we can actually get the Fed to raise interest rates, if all these things come together, all of a sudden you're like, wow, this thing could really rise over the next 6 months. Your target might be 140. Not 121. You see what I mean? So you have to decide now what you want it to do. And yeah, I would love for it to drop another 100 pips so I can look to buy it. That'd be great. Okay? It just may not be 120. You know, maybe it's one of these other charts. No, it's that Euro USD one. This is, again, us scalping. It's a weird place to draw a fib. I can't even see it. Dun, 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 dun. $15 Euro USD. Are we at resistance? If you're a bear, you'd believe it, right? MACD neutral. If this falls back into the trade zone, Euro USD will print somewhere between 8 and 12 red candles. Okay. Don't you think? But is there other resistance? I'm going to wrap up here because this is one of the first pairs we did talk about. I just want to revisit. Okay. Could be on this time frame, but what about the 4-hour? 21 is getting closer, isn't it? Oh, you want to talk about kitty cat? See, I'm glad you bring it up because I forget these things. I already talked about Aussie dollar, so to me it's like I already talked about CAD. I mean, they're all commodity currencies, but let's do it. Let's do it. Get some CAD on for Wyatt. All right, so I don't know if anyone caught this one, but you can see how we have it set up, right? 1, 2, 3. So this is up almost, just over 200 pips from that setup. So where are we now in the grand scheme of things? Let's back this out. Maybe we need a cleaner chart. Let's do lots of old stuff going on here. Wow, look at this. Amazing, huh? How this fib goes right to that fib. Wow, just amazing. And then what would you do? Come on. You'd fib that move. What a beautiful trend, huh? Right off there, right up to here. Very nice. So on this hourly, you can see that we're starting to be concerned about not making a higher high. So in this case, do you want this to go up or down? See, I could see either way, I suppose. You might be thinking this. In that case, you would want to sell. That means either the American dollar loses value or the Canadian dollar gains value, or both. Let me get rid of this here. Okay. And then I'm looking at, if you want that to happen, this is a good place for it to happen. It's a psych level, which is fine. But I'll tell you the way I would play this is I wouldn't sell a double top in such a nice, beautiful technical move. There's clearly bulls on this. So one of the things I would do, if I wanted to sell this, is I would wait for a significant drop and then I would wait some more for a lower high, and then I would try to sell it. Okay. Okay. A lower low would even be better, but I'm just going to draw it like this. Yes, the oscillator's fine. We even got a little micro divergence and stuff like that. So it could roll over here. But I probably won't be the one rolling it over. So I'll wait on this one. Okay. We already have a good setup on the Aussie USD, so I think I'll just wait. But, this would be fine. Again, a disappointing FOMC might bring this down. The only problem is, and the reason I kind of focus on Aussie more than the Canadian dollar, is the Canadian dollar has a higher elasticity to economic conditions in the United States. You see what I mean? Interesting. So, yeah, I mean, think about it. Canada's largest trading partner is the United States. So if the United States isn't doing well, there's no reason for Canada to be doing awesome. So, if I wanted to trade a commodity currency, gold and dollar, whatever. I just Aussie. Let's just leave it at that. We'll go with Aussie to begin with, and then we'll see what happens, right? So one of the things I often do, like if I decide right here, right now, I just want to buy the US dollar, okay, for whatever reason, I go here and I say, all right, I'm going to buy the US dollar. Which one am I going to sell first? Which pair, or what am I going to sell it versus the US dollar? And I start with a relative strength exercise. And now some of it I do with, correlation and historic elasticity and all this kind of stuff. Some of it I just know from experience, but, you can get that too. If I want to buy US dollar, I'll look at this and ask myself which one which one of these three do I want to sell first, or which one of these ones on the bottom do I want to buy first? Because either way, I'm buying US dollars. And that's where relative strength exercises really help. Let me get these on the same time frame. Relative strength exercises, but also like correlations and stuff and bias. That's all gonna. So like, for example, if I wanted to buy US dollars, I wouldn't mind selling Euro USD. It wouldn't bother me one bit. I would hesitate on the pound dollar because over the next few months I'm going to be much more bullish on the pound, and I don't think I'll be bullish at all on the euro in the next few months or even in the next year. So I'll sell euro dollar before, and then so on and so forth. So then I'll look at various correlations. Maybe I want to be long USD yen. Maybe I want to be long USD Swissy. Why? Interest rate differentials, negative interest rates in Switzerland, for example. But in CAD, well, maybe. We'll see. But it may not be my first choice. Okay? And that's how I do it. I tiptoe into positions. I tiptoe into a portfolio. And notice what I said before I said anything else. If I decided that I wanted to buy US dollar. That's it. Where most amateur traders mess things up is they don't start with that hypothesis. What I've talked about in the past, like a sellable idea that you can explain to an investor. What are you going to do with the investor's money? Oh, well, I want to buy a whole bunch of US dollars. Why would you want to do that? Oh, well, let me tell you why. Boom, 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 boom. These are all the reasons. So I'll start with that idea first, and then I'll build upon that idea, one trade at a time, move my stop to break even, another trade, move my stop to even, over and over and over and over and over again. Okay? All right, guys. Well, thanks for hanging out with me today. I hope you appreciated the technical analysis. Maybe tomorrow we'll do some yens. More technical analysis. Yeah. Aussie yen, sure. Cool. Well, make sure you go through all the trading ideas on Forex.Today. Like I said, leave a comment, give feedback to the analyst team. I mean, they're real people. They're people in this room right now. They spend hours every single day writing out trade plans for you. It'd be nice if you left a comment. Even if you disagree, why not? Yeah, Felipe, they're not robots? Yeah, totally. No, they're folks in here. They spend time. They share with you. Maybe you should share back. So peace on earth. May the pips be with you. May our profits be above average. And thank you for being on my team. I'll see you tomorrow.